The next conversation on Indian Open today is Reliance Nippon Asset Management, which reported a 14% decline in revenues and a 16% fall in profits in the third quarter. Between market volatility and regulatory changes that restricted expenses charged by mutual funds, the AMC had a tough time in the last 3 months of 2018. Let's go across to the CEO Sundeep Sikka to decode the quarter gone by. Sundeep, good having you. Thanks so much for joining in. Neeraj here. While expenses were not an issue, growing revenues was an issue in quarter three. Is it a factor of the volatility in the market alone, or is it that you believe regulatory changes make it difficult to grow revenue for an AMC at large?
I think let me share with you, I think we're very happy to share with the Q3 numbers. I think overall, if you were to look at, I think our operating profit for the last 9 months has gone up to 384 crores, which is up 7%. Clearly, I think if you were to look at, and also what has been more exciting during this quarter has been the retail flows which have been coming in. We clearly remain one of the, not one of the largest retail mutual fund, having assets in excess of 83,000 crores. And also on an incremental basis, on a last 12-month basis, we have added 12,000 crores, which is the highest. Considering the fact that we are a very, very retail asset management company with these kind of flows, I think we can clearly figure out the new mutual fund investors are still coming in spite of the volatility. However, I mean, your question on the revenue, I think clearly the slowdown in the revenue, I think, which has been there is on account of a couple of things. This quarter was one of the, it is one of, after 4 or 5 years, we have seen overall the assets of the mutual fund industry degrow, not much but little, but at the same time, the revenue pressure comes on account of 3 things. A, clearly because of the NBFC crisis that we saw a lot of money shifting from debt into money market funds, which is a flight to safety which happens in at such points of time, because of which we clearly saw there was a little bit of a pressure on revenue. At the same time, we also saw there was a change in product mix, and clearly for us as Reliance Nippon Life, we added about 17,000 crores of ETF money which came because of CPSE. I think while it adds to the overall assets, but as you're aware, ETF, the realization is a little lower than the active funds. And thirdly, was also there was a little partial impact of the regulatory changes which we saw. So clearly this quarter for me, when I take it, while there was a little bit of a pressure on revenue, but as you can see, the operating profits have gone up by 7%. Clearly tells you, I think from our perspective, I think what we are trying to do is also, it's not just about the revenues, we are trying to see how do we take care of the cost. Most of the branches that we have, which are in small cities and towns, I think we are clearly seeing the investments have already been done. And in the last 1 year, we added about 100 new branches. Now I think we are clearly seeing these branches adding to the revenue, because all of them we are seeing flows coming in. And also during this quarter, what was again another highlight was, which adds to the bottom line, was we saw 71% increase in our digital inflows. We saw 2,73,000 digital transactions, which is up 71%. And as you're aware, because of the digital transactions, the overall cost is much lower. So clearly, the pressure on revenue was account of a couple of things that I mentioned below. But I think we have to understand asset management industry it's a cyclical business. I think you will always have periods of 1 or 2 or 3 quarters where markets can be volatile and the change in product mix can have an impact on revenue. But from a long-term point of view, we remain as excited, or rather even more excited, because never before I think we have seen, in spite of so high volatility, new investors still come into the mutual fund industry.
Because of the decision to ban upfront commissions, expenses for the AMC businesses were expected to be lower. Has that helped you in the quarter? And more importantly, will that continue to help you over the next few quarters while the base effect would still be in play?
So the way you have to see this is clearly, I think the reduction in the banning of upfront means it moves more towards trail. Clearly, I think for us, I think we have a very high percentage of our assets which come through IFAs, and where the trailers were always there. So clearly, I think to your question, yes, it's going to help the entire mutual fund industry, because with the upfronts going away, I think clearly it's going to add to the bottom line. The reduction will be there in the upfront expenses. But since this thing came during middle of the quarter, the impact of that is not seen during the full quarter. But I think over the next 1 or 2 quarters, I think you will see, I think it play out well. But like I said, for us, majority of our assets come from IFAs, where they have always focused more on trailers than the upfront. So I think, but overall, I think, I clearly see the cost of acquisition coming down for the industry.
Industry and over the last 6 months had to grapple with regulatory changes, and while and newer products. So while ETFs have always been a big thing for you, can you give us an outlook on the newer business avenues and what they mean for revenues for you in terms of businesses?
I think let me take your first question on the regulatory changes. I think I am very confident. I think clearly any industry that grows will go through a lot of regulatory changes. And clearly over the last few years, every time we talk of a regulatory change, typically industry sees it with a little bit of negativity. I think they're thinking that an industry will stop growing after that. But if you see the data in past, with all the regulatory changes that have taken place, industry has only keep growing. And I think we need to always be open. I think whenever in any industry, and especially when you're dealing with the public money, we're dealing with the investors, I think there will be always be tighter regulations which will be coming, and I think it's important for all stakeholders to keep responding to that. From our perspective, the way we see the couple of regulatory changes which have come in the last few months, clearly what they do is they're a reality now at this point of time. What they do is they make the mutual funds cheaper for the investors, and as regulator believes it is good for the investors, anything that is good for the investor is going to be good for the industry. So it's important for all stakeholders to ensure, I think, that they get aligned to the new business models, wherein I think the revenues, I think the idea is not the revenues coming down. We have to see the opportunity, how you can increase the volumes as the industry grows multiple times from here. As far as your second question was concerned, I think clearly India, I mean, there's a scope for AIFs, PMS, ETFs, a lot of these things. I clearly believe, I think as a company, there is scope for everything. That's the reason. I mean, we are one of the few asset management companies in India, which is a true asset management company. On one side, we have a core mutual fund business, which caters to as small as investors who are investing 100 rupees in SIPs also. On the other side, we have our PMS, we have our AIF, we have ETFs, we have offshore funds. Clearly, there's going to be scope for all these products. I don't see a case that one cannibalizing the other, because each cater to a different set of investors. We offer our AIFs to investors who are investing only 1 crore and above. I mean, those are not the investors who cannibalize the 100 rupee SIP guy. Clearly, ETF, again, we believe there is a scope to grow multiple times from here, but we do not believe that is going to cannibalize the active business, because these are two set of investors are totally different. There are investors who would like to go into low-cost products for whom ETFs will become important, and there are going to be investors who are going to be coming first time into the mutual fund industry. For them, they are going to be coming to active funds. So I think I'm not in the camp which believes one will cannibalize the other. I think we believe, I think how do we keep adding value to the shareholders? So because of that, we are participating in every segment of asset management industry. So we are present in all, and clearly I think the idea here is we believe whatever, I mean, we need to give the choice to the investor, and I think let the investor choose where he wants to invest. And clearly I think we believe, I think we have the expertise in all these business lines that you talked about. So I think there's a great opportunity to grow each business line, and as we keep talking every quarter, I think we'll keep sharing with the progress in all the business lines that we talked about.
Wish you all the best for that, Sundeep, and hopefully the quarters ahead are better than what this one was. Thanks so much for taking the time out and being with us today. That's Reliance AMC, of course. The numbers not quite as good as maybe some of the others, but the management confident of a revenue CAGR of about 15% over the next 4 to 5 years. That stock will come up on your screen, about 3.5% lower in trade, and maybe with the reason on a valuation front it's a lot cheaper than the others, but the performance on the quarter maybe left a little bit to be desired. The market's flattish in the session right now. The Nifty 50 just languishing out there. The mid caps and the small caps are not doing too much. I just want to wrap up the show with one quick check on Prabhat Dairy and the other quick check on ICICI Prudential, the two stocks that stood out on market open. Let's just see what they're doing right now. Prabhat seems to have recovered a bit of lost ground. ICICI Prudential languishing at the lowest point of the day, by the way, on volumes which are much higher than the average volumes. 5 million shares traded already on ICICI Prudential on a single stock exchange alone. So that stock has sold off in a hurry in the session today. Take a break. Back with the FNO show, which will probably address all of these stocks and more. Thanks so much for watching Indian Open.